we start off with the Nasdaq's record day. The index closing above 10,000 for the first time ever, led by big names like Amazon, Apple, and Microsoft. But the run was clipped midday when Fed Chair Jerome Powell said the Fed wasn't even thinking about raising rates, with the Nasdaq pairing its gains and sending the broader markets close to the session lows. So does zero forever? What does that mean for this rally at this point, Guy?
Well, it means, everybody said it, so I'm not splitting the atom here. I'm not breaking any news, but it means we've absolutely gone the route of Japan, like it or not, and that's seemingly the course that they want to take. I think it's absolute madness. I have no idea why he couldn't have just said we remain data dependent and that's it. I'm shocked that he felt it necessary to say we're not even thinking about raising rates. I don't understand what that is. I'll say this. That, to me, seems to be the same autopilot today's statement that he said back in October of 18 on the other side that he got, and I'll use the word, fricasseed for. So, we're data dependent. That's it. Next question. And by the way, does it lead to wealth inequality? Well, he seems to think not. I think the Fed and central banks globally are the main reason we are seeing this huge chasm between the have and the have-nots, not only in this country, but globally.
Yeah,
there you go.
I don't know, Karen, if you were surprised by the market reaction at all. When I heard that, I automatically thought, and maybe this is just my nature, that things must be really bad if he's saying that he's not thinking about raising rates, that we're that far off from even contemplating that move.
Well, it was a little more downbeat than I had thought, but it makes sense to me that they really want to ensure that the credit markets are functioning smoothly, and that in order to do that, I think the credit markets need to believe that they're still there, the Fed's still there, which I think we all sort of believe that. So in some case, I think in some ways he's just sort of restating the obvious. I do think it would be too early for him to say we're already thinking about how we can exit down the road. I think it's too early for him to say that. So I'm not as pessimistic as you are.
Tim.
Well, at a time when companies are not willing to give forward guidance, the fact that the Fed's ready to go out there for almost 2 years and say we're going to be close to zero or at zero, quarter to zero, is really hard for me to understand. What's notable about some comments that were made in there, through the 128 months of the expansion, they've been unable to get above their 2% inflation target, which means the Fed has no control over inflation. So let's be clear. I am concerned about this as a market participant, though. This is just what we've been fed, but a massive spoonful from the last 5 years. And so this is not a W, this is not a U, this is not an L. The markets have given you a V, and they've given you a V, and they've given you a V where I think the sense on where volatility, we will have these bouts. But as long as the Fed is in here like this is exactly what you get. You get lowered inflations, you get valuations that don't mean much. And I think this is the case where you had this move back into these mega cap names, better growth, but really growth at a reasonable price at this point over value. But this is coming after what had been a vicious 3-week run for the value stock. So if you want to say this is re-rotation, in other words, rotating out of the rotation, that's great, but I'm not so sure that this is suddenly a massive move. We had a massive move, and 2 days of the Nasdaq outperforming the S&P by 3.5% is extraordinary, but I don't think that has to be the next 3 days.
Dan?
Yeah, I think the divergence between the S&P 500 and the Nasdaq 100, I think, is massive. I can't tell you, that it portends some immediate crash in equities or anything like that, but it does tell you that people are getting back into defense. I mean, that Microsoft, Apple, Google, Amazon, that is defensive. That's what led us off the bottom in March and was showing great relative strength. So the fact that these stocks have broken out the way they did, is pretty amazing. I'll just say this about the Fed. Jerome Powell, that guidance, I mean, he's doing what I guess he thinks he needs to do. just so you know, the markets are working just fine, by the way, even the credit markets. So I'm not certain why the pedal is still on the metal. And as it relates to that charlatan Larry Kudlow this afternoon on the exchange, I mean, what are they talking about? How great the economy was. Earnings were down year over year in 2019. We had nothing but multiple expansion in the S&P 500 up 30% because the Fed started cutting rates again and they started doing QE again in the second half of last year. So to use Guy's term, it's kind of madness. And I'll just make one other point. We've been talking a lot about the banks. I got fricasseed, as Guy would say, also off that move off the bottom. But what are they telling you right now? Look at the XLF. It was a perfect rejection at its 200-day moving average. It's down below the breakdown level in March. JPMORGAN, a name, that's the one you keep an eye on, also down about 8.5% from its highs just a couple days ago, or the recent highs, also rejected at a key technical level. And again, I'll just say 105 is the level. I think the banks, if they fail here, they're telling you something. And I don't think it's bullish that Microsoft was up nearly 4%, Apple up nearly 3% today. I mean, you have $6 trillion worth of mega cap tech stocks once again just dragging the market around.
Yeah, and Karen, I was going to go to you on financials. I mean, like it or not, financials largely trade on the perception of a steep yield curve, whether or not that has a direct impact on their business itself. And so here we are with Jerome Powell saying zero for a very long time. Does that make you concerned about this trade?
Well, I think there were some other things going on. They were down even before Powell started speaking. I think there was some negative comments from Wells Fargo about their net interest margin, and I think that was weighing on the stock somewhat. I think also they've had an enormous run. I don't love a zero interest rate environment, but we'll have to see. We'll see in early July how credit quality is evolving. One of the other things Wells Fargo said that was bearish was about them needing a bigger provision for the second quarter. We'll see how the banks, how the other JPMorgan in particular, what they're seeing in terms of needing to increase provision. I would be surprised if it was a meaningful increase. So I think all those things together, a little zero, a big run up, and negative comments from Wells Fargo made for a cocktail for a pretty bad down day for the banks.
Yeah, what do we make, the Guy, of the big cap techs, the ones that have gained, the ones that are gaining even more, that are increasing sort of the chasm between the haves and have-nots in the markets at this point? With what Powell said today, does it make that particular rally even stronger in your view?
It seems pretty impervious right now, right? And and Tim has mentioned this, Karen has as well. I mean, they've become, maybe for good reason, seemingly the safety trade. I mean, that might not make sense, but clearly that's what's going on. But again, and I'm going to get added for this ad infinitum, but Apple, as you see the move in Apple, and Apple's at an all-time high. It's a wonderful company, but it's clearly not doing it on robust earnings or revenue growth. It's doing it on multiple expansions, some of which, by the way, is justified. We've talked about that ad nauseum as well. What it tells me is to look somewhere else. So as well as that did, I look at the IWM today and I see it down more than 2.5%. And I wonder, the Russell, which has had a monster move off the March low, I think somewhere around 54% or thereabouts. I wonder if typically that leads us to the upside. Is today some sort of precursor on the back of these Fed comments? I don't know. I'll say this quickly because I've seen this movie before as well. You can go back and look at a number of times when, whatever Fed person has said whatever he or her has said, you have a down day in the market only to be followed up by some huge monster rip on the next day and some sort of delayed reaction. So just keep that in mind as we go into Thursday, Mel.
Yeah, Tim, you look like you wanted to jump in.
Well, I just think there are trades here that still could be interesting, and a day like today seems extraordinary, but so were, I'm going to repeat, the 3 weeks before this. Look, the IWM is not as bad as it appeared today. Banks, the story on banks is not today. It's also not what it was from the last 2 weeks. You have to understand that banks who were really just beaten after they gave their Q1 numbers and they put in reserve numbers that were certainly very concerning for people. They were strong reserve numbers, as in they were being very conservative. We've slowly started to unwind this, and Karen has said this, I have said this, there have been very many times in the last month and a half to 2 months where there was either something was not right, the market was not right, or the banks were not right. And I think largely it was that the banks were not right. In other words, I think the banks were still being treated like there was credit issues that I'm not saying are not out there. But I just want people to take a deep breath. And these moves have been violent on both sides. But I don't think that the move today suddenly means everything we were talking about for 2 weeks before this is not happening. The value stocks were beaten up. If we have any sense of recovery here, I think there's still some room for them to run. There's no question that MAGA stocks and mega cap tech have been defensive for the last 4 years. Anytime you get this kind of a move. But I think we just need to relax. These are extraordinary moves. The market's had an extraordinary run. And I actually think, if anything, the trends that are probably the newer ones here is that the dollar stays weak, that resources continue to rally, that foreign stocks will continue to rally. And these are things that I think investors have to pay attention to. Look at the Chinese internet stocks. They continue to roar at a time when there's been a lot of geopolitics, and yet that's a trade that makes a lot of sense in the new economy.